Hi, Jonathan York by Financial Partners, looking at investment markets. With the US government now back up and running, it's interesting with the data that's coming through. The data that has been released on jobs was actually a little bit stronger than anticipated. For September came in at 119,000 versus expected 50, and for October came in at 40,000 versus expected 20. Now, that is obviously quite interesting because, if you remember, Trump fired the Bureau of Statistics person for releasing data that he didn't agree with. And now all of a sudden you've got these 2 months coming out which are better than expected. But interestingly, it looks like the government is not going to release the GDP data or CPI. Indeed, the next CPI data will be released on the 18th of December, and that's after the Fed meet on the 10th of December. So potentially a bit of a dichotomy for the Fed now because, they were looking at the December meeting as sort of cutting interest rates because of the weak jobs market. But with those numbers coming out, which looked a little bit stronger, and certainly September was much stronger than anticipated, it really is a sort of a 50-50 call as to see whether we do actually see a further cut in December or not. And that was certainly backed up at the last Fed meeting where, Jay Powell came out and said, December was not guaranteed to be a further cut. Obviously, Trump wants lower rates, and you would expect Stephen Mnuchin to be voting for a rate cut of at least 50 basis points. Now, Trump has continued his criticism of Powell, but interestingly now he sort of roped Scott Bessent, the Treasury Secretary, into it as well. In a recent speech, he was, very critical of Powell and also of Bessent as well for not really getting him in line, and sort of threatened to sack both of them. Which is quite interesting because, the Fed should remain independent and not politically associated with the administration. Now, what is interesting, the rates have started to pull back in the US now. That 10 years back just around 4%. The 2 years 347. And the 30 years back to 462. Now, certainly on that 10 year, that's fallen about 15 basis points over the last couple of weeks. So certainly the Fed meeting on December the 10th will be very interesting to see how that plays out. Now, in the US, consumer confidence is plummeting back to 88.7, which is the lowest reading in 7 months. Which again just sort of goes against the sort of rhetoric coming out of Trump and the administration that certainly more from Trump really, that this is the hottest economy we've ever seen in the US and it's doing exceedingly well. Now, Trump also suffered a further setback as well with the cases against Comey and Letitia James being thrown out because the appointment of Lindsay Halligan was unlawful. Now, potentially there is a little bit of good news out there because there is a sort of near complete sort of peace plan on the table for the Russia-Ukraine war. Although looking at it, Ukraine has to give up certainly and concede quite a few concessions to Russia, and Russia really doesn't have to give up much at all. But what is very interesting is Russia's been very quiet on the sort of deal and has really failed to comment on it yet. Which again sort of begs the question, does Putin really want to end this war? Trump's polling as well is falling to record lows. Despite what he says that he's seen record polling numbers for himself. Which isn't backed up by the data. Now, there were further talks between Trump and Xi Jinping from China, but again, at present, they seem to be sort of struggling on actually putting any sort of pen to paper to sign any sort of deal, especially with the soybeans. But again, according to Trump, it's all going, very well. He's got a very good relationship, and he expects to see it done in the next sort of day or so. Now, oil's backed up again, sort of 57.80 and change. Now, the highly anticipated UK budget, in the end, came out not too bad. Certainly, there were some tax hikes out there, but overall, it seems to be reasonably well received. Now, in the EU, all eyes are really on that peace deal that's been put forward to end the Russia-Ukraine war. But as sort of stated, Russia has been very quiet on this and really hasn't come up with any comments at all yet. Now in Australia, we're going to start to see monthly CPI data coming through. Now, if you remember, the last print on CPI was that quarterly print that came out at 3%, which really stymied the ability of the Reserve Bank to cut interest rates further. But now going to a monthly print, it might be slightly more beneficial to Reserve Bank, and the fact that we'll get more up-to-date data coming through before their meetings. Now here in New Zealand, as expected, the Reserve Bank cut the OCR by 25 basis points to take it down to 2.25. But really left the door open for potentially a further cut if the data supported it. Because despite sort of green shoots coming through in the economy, it's still pretty sluggish out there. You've got a housing market that is starting to move, obviously with the recent rate cuts, but also as well job adverts and job filled is actually getting better sort of month by month. But certainly certain sectors are still doing it pretty tough out there. Hospitality and retail still really struggling, and it'll just be interesting to see how they fare over the sort of Christmas period, which traditionally should be a very strong time for them. Now, Fonterra have just trimmed their price targets for the coming season, moved it down to $9 to $10, with a midpoint obviously of 9.5. That's come down arguably sort of 50 cents from the previous sort of targets. So now with this rate cut, it'll just be interesting to see how it does translate into a little bit of growth and certainly a bit of confidence out there in the New Zealand economy. So if you are looking for income options, go to the website www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.